This is your host, Stephen Sargeant from the Around the Coin podcast. This is not an ad or promotion, but I just love this shirt from Trust Finance. Anyway, crypto gang, we have an amazing conversation today with Joe Kelly, who's the CEO and co-founder of Unchained. And these guys are doing amazing things with Bitcoin, only Bitcoin, custody. They're doing inheritance, retirement planning, Bitcoin backed loans. They are the OGs when it comes to utilizing your Bitcoin. And they only really focus on long term Bitcoin holders or people getting into the industry, getting into Bitcoin, especially with this huge regulatory push and momentum in the US. This is a great conversation as we talk about the evolution of Bitcoin, what happened from 2016 when they started to build this company until almost 10 years later, which we've seen the industry evolve to some of the all-time highs that we've ever seen for Bitcoin pricing. Great episode with Joe. He's just really detailed about how to break down, how to utilize your Bitcoin that people probably haven't even thought about, including estate planning, tax planning. They do it all at Unchained. Enjoy the episode. This is your host, Stephen Sargeant, the Around the Coin podcast. We're in for a treat today. We got Joe Kelly, co-founder and CEO of Unchained. No, not that Unchained, but we'll definitely explain. Joe, tell us a little bit about, you're building a leading Bitcoin financial services company, but you've been doing it since 2016. So you've probably seen a lot, heard a lot, shared stage with companies that may not still be with us today, and some that probably have surprised you. But I want to go back a little because, you founded a big data company back in 2011, working with like data scientists and cloud computing specialists. What set the stage for you as an entrepreneur? What was your experience like in Austin, especially that far long ago, which has turned out to be quite the fintech crypto hub?
Yeah. Personally, I've been thinking a lot recently about the metaphor and the experience of the frontier. I knew I wanted to be an entrepreneur as a teenager and tried my hand at a couple of companies here after moving to Austin. But I knew I wanted to work in the frontier of technology and what's the latest and greatest. And so that era of 2009 and 2013, when I worked on my first technology company, that was just as big data was becoming a term. And I actually did seed some experiences that were helpful in coming into Bitcoin, because a lot of it gave big data its sizzle, and most the thing happening there was these large data sets coming from online, from digital applications, and people needed to store those data sets. They needed to do analyses, gain insights. But as they got so big, you couldn't fit all the data in one machine, one computer. So places like Google and Yahoo were early pioneers in distributed systems, or how to distribute these big data sets across multiple machines at a time, pre-cloud computing and all that. So that those issues, though, with having how to have a data set that's consistent, that if like a record is manipulated or changed on one of the nodes, like how does that affect the overall database? How is data replicated? So it's staying up to date and consistent with everything at the same time. I wasn't an architect or a developer in that prior business, but my co-founder here at Unchained, he was one of the other co-founders of that company. So when we sold that business in 2013 and started looking at and studying Bitcoin, he was very helpful to have along for that. And he was actually kind of leading more of our investigation to it, because he had that background in distributed systems and understanding what is the problem blockchain solves. And then really the second thing, I'd say, even some of what I kind of brought, well, he brought the technology. I was looking at it from the development of markets and companies. That being our first company together, we'd gone through some painful experiences. One of the more painful ones was pivoting the business from being kind of what was an open data marketplace at the time into being an enterprise software provider. And that was the experience of changing out your customer. Like, you start a business to do one thing, you may not be sure who your customers are, but you're piecing together great technology. And then the pain of trying to take that to market and convince people to take your product because it's better for them. That's not necessarily how customer behavior works. They're looking for problem solutions all the time, or their vitamin or pain medication kind of a thing. So like that model wasn't there as embedded in us as entrepreneurs early, but we found our way there as just by needing to make that business work. And so coming to the Bitcoin space and ecosystem there from like 2013 to 16, what I observed was a lot of that similar behavior that was there in big data. Hey, I don't know about Bitcoin, or it's confusing. I don't know if but blockchain technology, that's great. Let's do blockchain for healthcare. Let's try to do blockchain for this other industry. Let's bring in these other things. And pretty much all those companies died. Like, that vision was just really misguided. So our insight was to really start with the customers are Bitcoin holders, and this is a new market. And the number one users of the blockchain anyways are Bitcoin holders. That's where the most value is. And so go there, or steer your business to that kind of North Star. So that's for all the changes and lessons and learnings and pivots we've been having on maybe more of a product level, sometimes business model. At the least, I can always say from the very beginning, Unchained's always been here to serve like the long-term Bitcoin holders.
I love that. You mentioned and touched on, being an entrepreneurial mindset from a teenager. We have a lot of entrepreneurs, investors, tech, crypto payments professionals that listen to this episode. Was there anything that you were doing back then? Like, were you selling bird CDs? Were you, maybe I'm aging myself there, but were you selling candy in school? Were you fixing up cars? Were you like tearing apart computers and speakers during class? Like, what were some of the things that you could tell right away that this is the kind of path I wanted to take that might not be the normal path that you saw some of the other students?
Yeah. Well, I was born actually in Anchorage, Alaska, and grew up there until I was in my teens. And my dad was definitely an entrepreneur. He'd worked for IBM in Anchorage and then left IBM and ran his own computer services business for a couple decades. So I got to kind of watch him. He ran that with my mom. I go to their offices and hang out. And we did, when I was 7, we built a computer together, a desktop computer. So I had some of that kind of exposure to technology. He was just always at the frontier of things. He was like working on typewriters in the 70s, and then later on small networks and then internet applications for his customers over time. So we always had to kind of keep up to date. And I had the benefit of being from, I really feel like he was just a classic guy of that generation in terms of that mechanical mind through what was just a ton of changing technologies over several decades. So that I'd say just his influence and that being around that and the idea of, I think, even Alaska as this frontier state and the kind of mindsets that are there and experiences I got to have made me more open-minded and accepting to things like Bitcoin, maybe even seeking them out, seeking what are these things that are not super popular yet or just kind of more niche, but that could be very transformative.
How do you mentioned transiting and transitioning and pivoting in your past business and even at Unchained a little, finding that right product market fit.
Yeah.
What are your thoughts? You also mentioned a bunch of companies that were there, yesterday, but not there tomorrow. When is it like a time to pivot versus like looking at the next shiny object and, hey, we need to be an AI first company versus, the foundations that you've built in blockchain over the last 8 years?
Yeah. Oh God. I mean, there's certainly no one size fits all answer. You're dealing with layers of these things. You're dealing with purpose, and we still hit on it, in more like business development context. Hey, this deal, it's taking now 9 to 12 months when we thought it might be 3 to 6. Do we cut bait? Do we think we're still just a few weeks away? Those are challenges you're always faced with in business. So, I mean, I do think in any business, I mean, the number one cause of death is people giving up. So it's kind of also like what is the choice you just need to make today that helps you survive another month or a year, and then evaluate the choices that you could make that would lead to your certain death in either this year or next year. And that even brings up, I think, the way when you talk about financial services businesses for this space that have fallen to the wayside, it's often because they're making decisions maybe a little bit for that short-term optimization, but that starts to stack up risks for them further and further down the line and cause them to blow up, and they and their customers lose a lot of money.
I'm curious. You mentioned, you're servicing Bitcoin cryptocurrency holders. That's been your main mandate. How's that evolved? Like, how's the Bitcoin holder evolved? And we're going to get into what you're building there at Unchained, but you've been in this space long enough. How have the needs evolved? How have the risks evolved that you've seen in this industry?
It's interesting because I think, Bitcoin, the holder base has only grown since we started, and I mean, since day one, of course, for it. And there are interesting, I think, cohorts or ways, we talk, I'm a class of 2013 Bitcoiner, or I'm a class of 2017, or I'm a class of 2020. I do think it's being at the front lines and onboarding people either into Bitcoin or to like later parts of the journey in self-custody and multi-sig, that I found there's that, the early Bitcoiners, 19 to 13 was very OG cyberpunk, as like an archetype. People that were on original mailing lists or in certain parts of the forums out there. And then 13 was really a Silicon Valley moment, or like kind of a moment where more tech. I'd say that's where me and my co-founder kind of were. We're here in Austin. We're not based in Silicon Valley, but very tech adjacent or kind of in that. And then 17 was a mainstream moment. 2020 was even another mainstream moment, but it also had by then more investors talking about it that had platform. Paul Tudor Jones started to see the birth of Saylor and his narrative. So that has been, I think, really interesting to see how those have evolved. And at each of those stages, there are always kind of more like mainstream people or just doctors, lawyers, real estate professionals that had shone. But it's been more of those, and especially the last 5 to 8 years. And I think that's been nice because that's kind of just where an Unchained is at. We see customers across all those populations. We have very early OG Bitcoin holders. We have the technology professionals. We have people that work in Wall Street for their day jobs. But increasingly, a lot of the folks are, and just of a more mainstream variety. And that's encouraging. I think it's good for the asset ecosystem. It emphasizes, providing good education. And I think for businesses like ours too, some of our having been around for a long time help also serves us, because now when you are new to Bitcoin or something like this, you go to the people who've been around for longer than you have and say, who do you use? Who do you recommend? What should I be doing? And so to have the trust of those people, the legacy holders as well, really helps.
Can you tell us a little bit about Unchained, right? When you were getting into this specific niche of the industry, you saw a lot of projects going around. What problem, what void were you trying to solve for your Bitcoin holders specifically? And was there any companies or projects that you saw that were like, hey, this is great, but we want to add a couple more features or maybe focus more on security than other things? And you're like, hey, we like this business model, we just want to do it a little bit differently.
Yeah. So you brought product market fit. I think we knew very clearly who our market was, as I described. So now it was the right product. There's a story of, I think, even like Amazon's founding, that was something like Jeff Bezos did a hardcore analysis on internet's here, selling things on the internet. That's where the future's at. What do we sell? And like almost just a list between CDs or furniture or garden equipment or these things. And then books had this like several of these qualities that just kind of made it a good thing to start with. And so we wanted to do something similar. I can't vouch for it as being as absolutely thorough or quantitative in a spreadsheet format, but it was about, okay, you're suddenly newly wealthy in an asset. What do you need? Do you need tax advice? Do you need alternative investments to invest it into? Do you need ways to safe keep it? And so when we looked at lists like that, we thought things like custody and exchange. How do I keep it? How do I trade it for dollars in and out? We thought those were solved problems. That was kind of naive, actually. It turns out that that's still a great evergreen frontier. But what we did come down to, and we prioritized because we didn't see it in the market at the time, was the Bitcoin-backed loan, taking Bitcoin as collateral, lending dollars against it. And it is a place where naivete and like ignorance can help, because not having been a financial services person, worked in capital markets or in credit and loans before, I could kind of study this stuff without the ways, now that I've been in a lot longer and know just how hard it is to raise capital for this, or how difficult it is as a business that lending can be. So we started that. We started with a very hard one that we had to combine. We had to solve custody because we wanted to keep the collateral safe, but to solve sourcing capital, getting dollars from traditional institutions and investors. And we had to solve that, marketing, how to acquire borrowers, and then how to service that, have a good experience. So we really bit off a lot in the early days, but it benefited us because then after the loan product was out, we had this custody platform that was interesting, that was differentiated and unique. And that led to our Vault product, which is more of a standalone custody account for clients to use, where they hold their own keys and we hold a third that can back them up. And then, that's really a foundation for us. So we help secure now over 100,000 Bitcoin for 10,000 clients, mostly in the US, and have other products we can talk about between IRA. We have our own registered investment advisor and other features. But it's really trying to continue to find that right. Well, knowing where market is, knowing where clients are, what are the correct successive products to continue to bring to them.
I'm curious, from a compliance background, we've both seen the regulations evolve since 2016 when you started this business. Bitcoin-backed loans has not been widely accepted by all governments. Even here in Canada, we had Ledin. They've kind of moved out of offshore just because of the way Canadian regulations treat stable coins as securities and other kind of nuances that make it tricky to play in this space profitably. What were some of maybe your early conversations, whether it was with regulators or even your banking partners, Because I'm assuming this is not a product that they were very familiar with. How did you sell them on that, and make sure that your customers were still able to get access to the traditional financial ecosystem while being able to leverage their Bitcoin with your company?
Yeah. One thing that was very clear coming in, again, not without a financial services background, was the BSA and anti-money laundering stuff, the illicit finance, just like it's walking into financial services out of more of a software, data technology stuff. Like you can't really, there's not really a lot of things you can do to go to jail in that world, in much of the Silicon Valley world. But in financial services and once BSA type matters are involved, and suddenly jail is real. And we've seen that with Bitcoin entrepreneurs in the past. So that was certainly on my mind, both on personal risk and just also pragmatically. And I'd like to start a legal business. So some of the first dollars we spent was on a consultant for anti-money laundering, BitAML. I'm trying to remember his name. I should get in touch over the years, but but he was very helpful just in getting our early program down for that, understanding that we're likely to be a money services business, and so choosing to acknowledge that. Bank accounts you mentioned, that was tough. It took like at least 9 months to get a bank account somewhere. It was hard going. That nexus of we touch Bitcoin and lending and we're a money service business.
Yeah, you might as well just say we're a big crypto exchange. that would be a very similar reaction probably by the bank.
Yeah, totally. And it was that, and there was choke line 1.0 had already been a thing of just like sort of antagonizing maybe money service business. So it was really tough going. Thankfully got a bank partner going that we could conduct our lending activities out of. And you're right. I mean, there's really no precedent there for Bitcoin collateralized lending. There was some precedent that like I could see and learn from places like Lending Club or SoFi, places that were a national storefront or web application for loans, and that had availability, sometimes restricted by different states. So state by state licensing regime for lending was a very early compliance related focus for us. We talked about lending regulations, Bitcoin and its unique properties as collateral. I mean, I find there's a nerdy subject there just about taking security interest in Bitcoin, but that like, thankfully, I'd say there's been more progress in uniform commercial code language for how you get a security interest in Bitcoin. Because a lot of people have tried to fit Bitcoin, and that's been on the whole journey of Unchained is just trying to, can we fit Bitcoin into like this securities box? Can we fit it into this other box? Or how do you fit it into these things that for really a landscape of legal definitions and expectations that revolve around accounts and intermediated finance. So really even going back to like what is Unchained and what guides us. When we're serving long-term Bitcoin holders, we believe, and many long-term Bitcoin holders believe, that best for them, best for Bitcoin is their ability to hold their own keys. And that's not necessary in all cases or applications for everybody, but still it's a predominant feature and a value-adding feature for Bitcoin for people to be able to do that. So we've tried everywhere possible to not kind of break or not say like, well, just because we're lending or doing this classic financial services model, let's treat Bitcoin this way. We would treat stocks and bonds, or we treat these other things.
Right.
And that's for a fact. That's what you saw BlockFi do. That's what you saw FTX do. That's what you saw. Like, go look at the graveyard of that era and that generation of financial services firms, and they were taking old Wall Street assumptions about business models and financial services and just trying to run that playbook here. And that's what you see is probably causally or highly correlated to how they failed. And so that's sort of an assumption in a place that Unchained never quite went. And back to even just that, in part because I didn't know enough. I wasn't a financial services executive or someone out of Wall Street that come in and saw the opportunity here. It was almost saved by our naivete, and in a way like we wanted to principally be Bitcoin native first, and then pull in the bits and pieces of financial services we need to have a good solution for clients.
And did you have the stats going in? Because I think there's stats that, especially during the last downturn, that like 70% of Bitcoin holders never moved their funds. Do you have those kind of stats when you're thinking about offering these products and services to long-term Bitcoin holders?
Oh yeah, great question actually. I think we're some pioneers in helping popularize the statistics. The well-known one is HODL waves. you search for that, it's now available in a lot of other data research tools. And we can't take credit for having produced the very first graph. There's a well-known Bitcoiner, John Ratcliffe, who published something in like 2014. But as we were working on, as entrepreneurs and trying to deduce the market here, asking the question, Bitcoin is a public blockchain. You ought to be able to see kind of what's the age or how old is Bitcoin? How frequent is it moving around? And so we produced a more live and up-to-date version of that, put the HODL Waves name on it, which is stuck. And it's beautiful because you can see the strata, almost like a geology, looking at the side of a canyon where there's Bitcoin there that's been untouched for a year, sometimes days, several years. And as those buckets come out, it's been pretty stable that on the order of 60% of Bitcoin hasn't moved in a year or more. And so that's a lot. And that's a lot of the value. That's a lot of this long-term investor behavior of people keeping something around. And many people that, it might be wise to sometimes move your Bitcoin every few years or just refresh your keys and whatnot. But people that hold Bitcoin, I think predominantly still the population are people that intend to hold it for a long time.
And that's interesting too, because you hear about how Bitcoin is so volatile. It's like the price of it is volatile, but not so much the people. But in traditional stocks, you see a lot more volatility with the people. Ronaldo pushes away Coke, they lose $4 billion within seconds. You don't typically see that kind of quick movement, what we call diamond or paper hands in crypto, as you would think. I'm actually interested, and I know, inheritance and retirement accounts might not be the most exciting thing, but we also have never had anyone on the podcast talk about these products and services. And hey, some of us, original people that have gone into crypto, we're getting older, and we want to pass it on to our next generation. So they're not just like dabbling in meme coins. Can you walk us through some of the use cases or scenarios where customers are utilizing your inheritance and retirement accounts?
Yeah, certainly. So I think it's just trying to kind of growing up, right? And yes, it's these assets become worth more and more and are a significant share of people's household wealth. And they're getting older, they're having kids, spouses. There's the need to think about these things as part of generational wealth and how they pass on. IRAs as well, you mentioned, they're kind of related to this, but they're a good long-term holding vehicle. You're not going to have the same level of tax exposure, especially if you're trading in and out or those kinds of applications. So we're well suited for that. And it's this balance of concerns where I mentioned our vaults are such that clients hold two keys, we hold one, and that's great. The client has unilateral control. They can move their Bitcoin without Unchained anytime they'd like using any open source wallet that supports multi-sig, as long as they have their two keys. But multi-sig is complicated for a lot of people learning about it for the first time. That's part of our value is educating them and helping them through that. But educating two household members or something, the spouse and others all at that same time, it's usually just the one, or usually there's kind of one person that manages this side of things. So what you want is when that person is knowledgeable, when they pass, how does that next of kin, that inheritor, what steps do they take? There's a key in the backyard, or there's a key in the vault, or there's these things. Like you want to have this set of trade-offs that they know there's probably some other important set of physical things that need protected that that next of kin can know how to access and get to. And if that's just one of these three keys, the benefit is that now, if partly a legal process or partly, as far as Unchained is concerned, the account holder might have been the original person, but you can designate these beneficiaries or trusted contacts or folks that when the time that person met their demise or incapacitated, that next of kin can contact Unchained. And after our process, then we can sign for them or help move the Bitcoin. And we're there to handholders. They might be totally new to Bitcoin or I have no idea what this key is, but I'm just told this is, worth millions or something like this. So that's a key role we can play in and around that. And we've done, and we have a valuable estate center on our website. People can find information about that process and how it works and how we support.
And I'm curious, what are, some of the more exciting use cases? Because, people listen to this like, okay, holding Bitcoin for 10 years, 20 years doesn't seem like fun, right? And it doesn't seem like you're really activating or getting the most out of your money. But you're offering trading services, lending services, using this as collateral that they can do things with their crypto and their Bitcoin without actually utilizing it or spending it. What's the main use case for people are like out there trading on a regular basis? Is it like, are they, lending it out? What are some of the main use cases?
Yeah. So we've remained conservative and made the products we've offered. I mentioned lending, starting with lending. Part of the conservatism there is we've maintained low loan to value ratios. That's helped to protect us and any of our capital providers as well as the borrowers. So we've never had a loan loss as an institution originating loans, and that's over $1 billion of originations. And I'd say that that's one of the principal means, but we do commercial loans. So clients that are starting businesses or making investments or acquiring assets, like that kind of activity, now that they may have a large capital base in Bitcoin that's supported through getting a commercial loan through Unchained. So that's definitely been something people use quite a bit. I mean, there's the point that just sitting in Bitcoin, as boring as it is still a great trade. Not
Yeah, I'm sure they're not complaining as the price continues to go up.
3% yield or yield kind of applications for Bitcoin have problematic characteristics that we can get into if we need, but increasing like number one behavior for, as we talked about statistically, Bitcoin holders prefer to hold it for a long time. So it is boring. I like the boringness of it. It's meant we can kind of build a successful company, not in the dark by any means, but not in a way that requires spotlight or requires like doing flashy, risky things, over-promising things. Good financial services firms are usually built out of the slow accretion of strong client relationships and trust in the brand and, just behavior that speaks for itself.
Have you seen an increase in education or at least awareness by, financial advisors? Like 5 years ago, I was like, hey, I'd love to remove my retirement into crypto mostly. And, every financial advisor, without having much knowledge about crypto, saying exactly what you're saying, right? People would just say it's a Ponzi scheme and just kind of set it and forget it. Have you seen, which is doing a disservice considering they're financial fiduciaries, they're supposed to at least make knowledgeable, recommendations or provide knowledgeable advice. Have you seen this uptick in people wanting to get educated, wanting to offer these solutions, especially now that customers are demanding it and there's a lot of optionality out there to find people that are willing to give proper advice?
Yeah, and there's a lot going on there. I mean, in the way that's kept the traditional financial advisor industry from being as helpful for clients, maybe around Bitcoin. Parts education, whether they understand it or not. Parts personal opinion, whether they believe in it or not. Parts compliance, whether their compliance people believe it or say or have attitudes about it or not. And then also practically, like how do they play a role in it when it's not just like a supported asset in the Schwab platform they're using or Fidelity, white label stuff they might use. And then, and lastly, also incentive. How do they get paid? Or like how, if it's not one of those types of platforms, can they charge fees on top? So a lot of things are happening to create kind of distance there. We certainly would see that, clients over the years would on board with us and they'd say, hey, do you know any financial advisor I could talk to? I haven't been able to tell my guy about Bitcoin, or like he when I first did, he told me I should just sell it, or, just these, they might be embarrassed or like shy. Now this is, 50% of their household net worth, but the chart of the advisor knows, the person only has the other 50%.
Right.
And so that actually led us to start about 18 months ago, our own subsidiary, registered investment advisor called Sound Advisory, that does tax planning and financial planning and some portfolio management for traditional securities and portfolios to kind of answer that need. Thankfully, though, we've also seen there is a cadre of folks that are independent advisors that don't have then that compliance department they're dependent on, or they can kind of be a little more forward with their personal opinions and beliefs that Bitcoin's a great asset in a household portfolio. And then especially I think people that were early enough to see that as advisors and were principal thinkers, they recognize also the value of their clients having self-custody. And so they can use Unchained in some pretty unique ways. For instance, you probably know well as an advisor, you can't custody assets for clients. You can't, it's got to be at a custodian or an account. You may have some administrative privileges too, but there are rules against you also holding the investment positions you're putting your clients into. So in Bitcoin's case, it's the same thing, but our multi-sig model does create some richer varieties. So now, Unchained is always holding a key. Instead of the client holding two, they might hold one and their advisor would hold the other. And so as far as Unchained is concerned, it's still the client is the account holder. They have the account with us. It's not the advisor's Bitcoin, but kind of behind the scenes or just underneath how it works, the advisor holds a key. And already even back to those inheritance scenarios where the household's probably really already has deep trust with this advisor, and the role they might have to play in any estate planning and transition type scenarios, that this kind of leverages that relationship that's already there. And so I think it's where we in the frontier realm, we always live at this fusion of traditional financial services. I think some of the great qualities of traditional financial services are the relationship driven parts of it, and to me, even just the relationship driven accountability. I do well for you, you're going to send more of your money to me to manage or to help you with, and just that's a virtuous cycle for that kind of thing to happen and beyond. So when we, I think, get kind of start to productize or treat the clients, their trading flows or whatever it is, as that's the product or that's the thing, and then you start to sacrifice some of those client relationships and things that have made a lot of financial services business also very successful, the ones that prioritize this.
I'm curious, with Genius Act clearing, Clarity Act, and more market stabilization regulations coming in the US, how does that impact your business? Probably in a positive way, because you're like, hey, more legitimacy, more guardrails, more guidelines by regulators versus kind of operating, on the fringes. But I'm assuming it also adds a lot of competition, right? Every traditional investment house or, advisor is kind of like flipping on the Bitcoin neon sign now and saying, hey, we do stable coins, we do Bitcoin. I'd love to know your perspective, especially since you've been in it, battling for since 2016.
Yeah, all told, is in that positive. And the effects we see are certainly in your relationships with very regulated institutions like banks. It's sort of like in that area that I call it, like the dogs have been called off. The examiners, the bank examiners and regulators that are in there, every quarter or for every annual exam. I think that there's just less push from their superiors and the political climate in DC to really investigate and choke out the crypto related activities. So banks are starting to come in. I think that's good. That provides more capital, it provides potentially more safe counterparties for the ecosystem. Unchained less affected by things that are, I'd say, stablecoin specific or token specific or security tokens and those things. That dominates a lot of the conversation. Place I'm particularly interested in and passionate about, and I know our clients are too, but is the self-custody provisions that are in the Clarity Act, as well as provisions to protect developers of non-custodial software and platforms. I mean, Unchained is an interesting hybrid case, or there's certain things we do as a financial institution, but we are also non-custodial. For the majority of Bitcoin we help secure, we don't control it. We don't have a unilateral control. So that's always because we're not trying to be an open source software development company or anything like that. We're already admitted to be a financial institution. We just implement in a non-custodial way. The non-custodial pieces don't affect us. But I do think the affirmation of the right for clients, for American individuals to self-custody using software and hardware wallets, I think that's really important. I think it's a great check and boundary to draw with the legislation that I think can just advance and keep it America in the lead around this asset. It's important.
Curious of any plans of expansion. We see jurisdictions within Latin America, around the world that might have similar or maybe even different regulatory legislation than the US will have. And now once they build out this comprehensive regulatory plan, any plans for expansion, or do you still see this market grossly underserved as, even though more and more constituents are, bringing in their service provider offers and products and solutions? What are your thoughts on expansion versus like really servicing the US?
Yeah, I think our focus is still the US. International there's like jurisdictional challenges that, some places don't recognize non-custodial things. You touch Bitcoin here, you're this virtual currency something. So,
Right.
that's challenging, that's expensive. And the US is a big enough market. And I'd like to see Unchained succeed here, feel very well secure here, and maybe go international or work on international partnerships really just over the next few years.
I'm curious your thoughts. We've been at probably similar conferences where crypto, Bitcoin was all about banking the unbanked. We haven't
Yeah.
seen that happen, even in the US, which is, one of the strongest financially powerful companies or countries in the world. We're still seeing, I think 5% of people are still unbanked or underbanked in the
Yeah.
US. What are your thoughts about that, especially being in the financial advisor space, seeing this, this generational wealth that you do? Is there anything that you think crypto will be able to unlock for some of the underserviced in the country?
I think it's inevitable. I mean, always throughout all history, there's some marginalized portion of society by some standards, and financial services is one version of that, especially in the modern era with how finance and money works. I think there's always more progress to make. And I think that even the attention or the way that services like Unchained, for instance, we work with people that already have Bitcoin or have some or have their means to acquire and about requiring enough amounts to make it significantly enough that you want a multi-sig setup or you want something more robust than you're keeping $500 on your phone in a mobile wallet, for instance. So, but I think out of like any big trend or any big technology, that there's a lot of capital investment that creates assets and things that are around for other people to use and to cheapen marginal costs for others that maybe can't afford the first computer that cost $10,000 back when $10,000 was $100,000, like these things. Like it just sort of, it all comes down a curve. And I think that's great. And you are seeing no evidence of that. There's a great article in Bloomberg yesterday about Bitcoin use in Bolivia. And I actually didn't know, or I hadn't really tracked that story, but they've seen 25% annual inflation there. That's a real problem. And there's very credible, as a journalist, did a great job surfacing of storefronts and the scene there of Bitcoin and some other cryptos, kinds of things of merchant adoption, local adoption by people. So what other better examples? If you look for them, you'll find them, right? So I think it's also just taking the perspective and how deep are they really looking if they want to criticize or be like, the industry's made no progress, because it's definitely non-zero.
You've had some great insights on your blog and on your website. I'm curious what your thoughts. We both have heard, blockchain, not Bitcoin. You focusing on long-term Bitcoin holders. What are your thoughts on that? We've seen that evolve over the years. Have you seen it being a conversation where it's, and versus or?
Yeah, I do think it's helpful that everyone continues to recognize the differences that make Bitcoin different in its inception, in its use of certain things. It's as a version of peer-to-peer cash, or like cash or money is like the best application for the things blockchains are there to solve. I do think there's a tremendous frontier of other things being tried and applications, but really back to just my roots as an entrepreneur and the mistrust I have and from my own personal experience of trying to take a technology and then make it suit a customer's, like that's a 1 out of 100 thing versus, you pick the right customer and you do things for them that they need. That's a 99 out of 100, kind of. We just have much more successful odds kind of taking things that way. But I think there are pieces and there's things we'll kind of compose out of the technologies that come out of this kind of blockchain thing. I think one example, I think, to also put a finer point to it, is I think just the adoption of cryptography. There's kind of the story that Bitcoin is built on the cryptography from the previous century that we've got the advantage of. And we were kind of there throughout the 90s. That was its own kind of compliance story about the threats to cryptography and whether it was going to be allowed as private citizens to use cryptography. And thank goodness, because now it's part of the backbone of the internet and backbone of all the banking and stuff we get to do thanks to encryption. But that experience, never translated into email, never translated into something like, the stakes didn't quite feel as high. So it's obviously high in financial transactions or how we authenticate into web services. But, sending an email here or there, we didn't care enough to like adopt like PGP and encryption for email. But our Bitcoin is valuable enough. We care a lot about its value. And then you've seen the coincidental creation of hardware wallets, Ledger, Trezor devices, Coldcard. There's now multiple of them. And that's I really feel that's this consumerization of the experience of using cryptography, using these keys, probably like that's just a learning curve. That's just like stuff that people still don't come out, of high school and like understanding. So there's some onus there on entrepreneurs and product creators and builders to create experiences that people understand and will use, and then we can kind of all advance a little bit together in the state of the art of technology and adoption. So yeah, I'm optimistic because that's kind of my answer to say I'm still unsettled on whether like we'll see a blockchain for anything that lasts longer than 20 years. That's not Bitcoin. Don't know. I think we're still like the next oldest, if it's Ethereum, is still only like a 2014 artifact, or maybe not even 10 years, or barely over 10. So, okay, well, last another 10, don't know.
Yeah, they just celebrated their 10th birthday, I think, last week, right?
Yeah, from probably the mainnet launch or something like that. So tough to say, but I think like cryptography, that there's a Libby thing there. It's been around for forever as far as many of us alive are concerned, and then the application of that, just security and authenticating human level decisioning. I mean, that's also important just in the context of the AI agent era and like where that type of trend is going. And thank God we have Bitcoin cold storage, keys and capabilities now, because that's one way you can keep your Bitcoin out of the domain of the bots.
I'm curious now that you're having Bitcoin backed financial products, but now we're seeing more financial products just go directly on chain with real world asset tokenization. What are your thoughts on that? How does that impact? Does that get people further away from holding their Bitcoin, using their Bitcoin? Now even with Bitcoin ETFs, we're further away from that underlying asset of Bitcoin powering it. What are your thoughts on Bitcoin ETFs, tokenized real world assets?
Yeah, it's two things. I think time will, and I think people will continue to kind of measure a lot of those things, or they'll be coming on that to measure it against Bitcoin, or what if with the dollar I did with this, real estate investment, or this thing, tokenized or not, over the next 5 years, how did that perform, or whether I put that dollar just in Bitcoin, kind of a thing. So as Bitcoin is just a monetary yardstick, continues to embed in psychology for people. I think that's always like the hurdle rate, or always the thing that like these other investments have to try to clear. And then I think also just from a real infrastructure perspective, we prove out the value. I think there's a narrative that stable coins on blockchains are going to reduce payment rail costs from the amount of intermediaries there, and versus the ACH system, credit card transactions, those kinds of instances. But it's that impact of like the consumer is going to be felt like day one. It's just it's going to look like a lot of them more the same. But once more of the network and of acceptance and utilization for perhaps exchanging dollars, but the rail is a blockchain where stable coins are moved around on, can that lower the cost by 10 to 100x for traditional finance? I don't know. I believe that's probably that would be one of the leading hypotheses though for some of that impact over time. And I think the real world asset side, that's kind of seeing, I think, what is a active capital markets, or like people are investing and doing things in this digital area, that it's new and it's easier to get attention in, and trying out new things in can get you, dollar flows or like investment flows. The same kind of thing happens in Wall Street, or like all up and down Manhattan, as people chase trends and like pitch new financial products around there too. It's its own capital market. So I feel like it's kind of the same thing. It just happens now more transparently and on the internet in a way that, but whether and if like real world assets on a blockchain actually has a 10x to 100x benefit, yet to be seen. I'm open-minded, but those are the challenges.
What's interesting about Unchained is that you've taken Bitcoin and you've created scalability to it with lending products and other products where we didn't really have that. That was Bitcoin's huge problem. But now we're seeing this emergence of like ordinals and NFTs on Bitcoin and DeFi on Bitcoin. What are your thoughts on this like layer 2 Bitcoin ecosystem? And does Unchained plug into that, want to play with that, or can that still help service those long-term Bitcoin holders by accessing some of these DeFi protocols?
I keep open ears and eyes on that stuff. It would be distracting for Unchained and our clients to think, wade them in, or do information sessions on what are ordinals, or are NFTs on Bitcoin the next thing for it's just noise. I think ultimately it's like short-term perturbations of thinking that the best thing we can do for our clients is help them not lose their Bitcoin over the duration they're holding it. And once that's there, then then we kind of layer the things on that are next. We love Lightning. I'm interested in kind of Taproot, Lightning's Taproot assets. These are things that I do think about, and kind of the productive use of some of the technical infrastructure that's there in Bitcoin, and what does it enable from like the layers of application point of view. That's actually a place my co-founder Drew spends a lot of time thinking and writing about. He's publishing things, talking about things on this kind of application stack for Bitcoin. So that's I'd say, especially from a company view, closest to how we see it, where it's interesting. Not in many cases though, almost all not yet ready for prime time, not ready for a company with its brand and relationships and things on the line to say, this is what you should do with your Bitcoin next. This is the next something. Again, most things, that's just not the case.
I'm curious. You mentioned Lightning Network. We saw a big push when they introduced Lightning. I believe it was in El Salvador as part of their wallet system, but we haven't really heard much about it. Doesn't seem like the adoption's going crazy. What are your thoughts on Lightning? Is it just like kind of that technology, like HTTPS or whatever, like where it's there, it gets you to one website to another, but you don't know anything about it, and it's working in the background, or is it just haven't quite picked up the way maybe you, me, and others thought it would?
I think it's a mix. I'm a fan, first of all, of just what is trying to be accomplished there. Like the admittance of we want ability to send Bitcoin to and from each other faster than the 10-minute block chime, and maybe do it at smaller transaction sizes. So, and it's the right thing. And then fortunately, unfortunately, to get there is really complicated, really a system that's kind of mind bending, but also like involves, principles of back to just how do you have a network that's in sync with each other, and then settles into this Bitcoin blockchain underneath. It's cool. I also think it's something not always known is like there's multiple implementations for Lightning. Lightning Labs is the by name and like one of the early pioneers, but there's others. Blockstream has C Lightning. So that just kind of even just as a network, it's interesting to understand. I think that it's always had growth. There's been consistent growth, not always in just Bitcoin that's in channels that you can see publicly, but also in people using it and applications for it. And I think it's already bigger than like Tor or like, things that are like the Tor network is kind of a version of decentralized file sharing and information hosting kind of a thing that's like widely used and been around for decades, but like to already have been or kind of eclipsed or have bigger usage patterns than a Tor network. So I think Lightning has by nodes. That's cool. That's interesting. That for utility and measurement of a network, that's there. So I think it just takes time. If that's the interesting part. This stuff. I heard someone put it this well. It's just like checking in. You could almost say it's about Bitcoin. It's just Bitcoin is so loud right now. But your comment about Lightning makes me think about it. It's like in the early '90s, you ask somebody like, "Hey, what about email adoption? It's only it's only a million users now. There's only 1.2. Like, is email that dude, it's 93 or like give
Right.
another 10 years, and no one's upset really about like having been in that first third of emails. Life is that. It's just I think that from adoption inevitability point of view, this stuff will continue to steamroll and snowball.
Speaking of interesting, as we end the conversation, what's new and interesting happening at Unchained? Any new product service offerings that you're excited about near the end of the year? Or just even maybe just the new year, like where regulations coming in, where you see, new entrances to the space that you can help service? Is there a new wave of next gen Bitcoin users? I know Bitcoin seems like it seems like the baby boomer cryptocurrency technology, but everyone's into meme coins or NFTs. Where do you see yourself positioning yourself and newcomers to the space in 2026?
Yeah. Well, one big recent development, we secured a trust company charter in the state of Wyoming. That's our trust company called Gannett Trust. And Gannett will allow us to do things like provide qualified custody on top of the arrangements we already do in collaborative custody. It will also enable Gannett to be a trustee. So a good fraction of the Bitcoin that people secure with Unchained are held by trusts. Trust being a distinct entity that's not a company, not a person, but a distinct type of legal entity. And that's valuable for it can be any number of reasons: tax planning, just asset sort of sheltering, for just inheritance kind of thing. So there's a lot of reasons you want beneficially utilized trust as part of the growing up narrative that we talked about. Just maturing as an asset is when you are someone building household wealth and now are starting to plan around your estate and what happens, trusts are one of the main options people will use. So Gannett can play a role for people that are going down that path. That's very exciting. It's back to just how do we merge traditional financial service utility with Bitcoin native approaches. And then other than that, we spend time talking to more and more, I think, bank partners, traditional wealth managers, finding ways to work together to continue to educate their clients and their stakeholders on how we do Bitcoin. I'd like to see that. I think that some of the real tension and real opportunity for Bitcoin is as an asset you can self-custody, asset that you can hold your own keys for, that teaches you something. It's kind of it's an opposite of how so much of the traditional financial experience works. All your assets are held with someone else. All the money that you have at the bank is quite always yours or not guaranteed to be available when you want it. And so this process of, I think, being a well-respected financial institution wrapped around the self-custody experience and be able to self-custody pill more and more people I think it's great. That's the privileged place Unchained's in, and what we're always excited about.
I love it. Is there anything your customers, partners, banking partners are asking about, or say, hey, can you come up with this product or solution or offering that maybe Unchained's not quite there, but you're like, oh, this is kind of interesting.
I mean, things like yield always come up. That's just the big danger zone and Bitcoin doesn't have a truly scalable credit market or a place that like there's Bitcoin bonds that trade at these things. There's a lot of factors for why. So I do caution people a lot in thinking about trying to get yield or Bitcoin return strategies. We keep an open mind for when and if something is ready. But yeah, that's always the top. Otherwise, it's just really the partners we align with most are the ones that understand the parts about financial services that rely on good relationships over the long term. And so when we find financial advisors that are working with families or others that, these are people they will be working with for decades, there's good alignment to like say, how can our application help you in these custody formats that we mentioned? How can, if you just need somebody to help lead education sessions or walk your clients through their Bitcoin custody options, happy to do that. And so that's most of what I'd say is increasingly also coming over my desk lately, which is great. Yeah, traditional wealth advisors at large banks that are finally have the clearance from compliance, have the enough percentage of their clients are asking about this, or they're really important clients now. They clearly they have already had Bitcoin, and I'm not smart enough about it. So let me try to find good partners that can help.
Joe, where's the best place that the audience can find you?
Cool. Well, my email is joe@unchained.com. Welcome to email me there. I'm also on X @JosephKelly. Our company accounts @Unchained. So follow us on any one of those and reach out.
Awesome. We'll put all the links in the show notes. Joe Kelly, thank you so much for taking us down the road of custody, self-custody, everything to do with how you can leverage your Bitcoin for the future of finance.
Thanks, Stephen.